Our price target on the S&P was 2020. We hit 2014. That's the first thing. Second thing is, we work with cycles that will tell us when they're tops and when they're bottoms. And cycles stop, so we're totally out of the market. I dare to predict that for the next many years, you will not see the S&P more than 5% higher than this. And there's a major thing coming down. I'm talking about far in the future, major collapse coming down starting in 2018 till 2020. And in 2020, the new bull market will start.
So I want to know, in terms of your prediction, as you're saying, for 2018 or 2020, what do you think is driving that? Do you think it's the Fed and the central bank intervention?
I think the big problem is the deflation, which I'm saying every year. Europe is already close to deflation. Japan is still in deflation. China has a very low inflation. And if the dollar continues to rise in the United States, we get deflation over here. So the big problem is the deflation. And I don't think the investors are ready for it for the moment.
Charles, how do you think deflation will actually manifest itself? Because right now, in the most recent quarter, we saw the dollar surge more than 9%. That's the biggest move for the dollar since the third quarter of 2008, when, of course, it was the financial crisis that was front and center and just beginning at that moment. So do you think that because we're getting such a strong dollar, that is a precursor to deflation as you see it?
Well, first of all, we have to take a look, and I don't know if you can agree with me, but if you look at the numbers, the biggest part of the world is already in deflation. Here is still so-so, but like I said, if the dollar continues to be strong, we get deflation exported by the Europeans, and we're in big trouble over here, especially because we owe so much money. Now, deflation and inflation of about 0% was the norm between 1800 and 1970. So we had bull markets over there. The only difference now is that we owe so much money, and in deflation, you have a big problem of paying back.
Charles, I just got to know, I'm curious, if you talk about these longer-term calls about there's going to be a deflationary environment and you see the markets going down that much, what exactly are you advising clients to do besides just go all to cash? Is there a way that you're having them play it in this medium to longer-term call that you're trying to make?
Well, the good thing is because we don't manage money, so we can be honest and neutral, so we don't have to be buyers, we can also be sellers. So sometimes there's no way to make money, and you have to be very careful, which is now. So the best thing is to be in cash. We're actually waiting. Soon we expect a low in gold, so we think we'll go back into gold. But for the rest, I mean, the euro is bad. We don't trust the bond market, so where should we invest?